Hi, and welcome to this week's Mortgage Broker Broadcast. My guest this week is David Miles from the PP Machine, and I wanted to get David back onto the podcast. He's been a guest already twice on the podcast, back in September 21 and again in May of last year. I just wanted to get him back onto the podcast. We've talked about Google Ads, we've talked about various things, we even talked about cleaning barbecue utensils and a few other things as well. Takeaways, I think, came onto the podcast last time. But I wanted to get his take on just really understanding what's changed in the ad world over the past 12 months. What's the hot topics right now? What are the things to think about? And just get his expertise and knowledge on those specific areas. So, let's just get David onto the podcast. You're listening to the Mortgage Broker Broadcast with me, Craig Skelton, the podcast which helps mortgage brokers at all stages of their mortgage broking career. So welcome back onto the podcast, David. How are you?
I'm very well. Good to see you. Good to be back. Thanks for having me on again.
No, good. It is good to see you, and it's been a while since we've caught up. And third time on the podcast now, I think it is. From looking back,
I think it is. Yes. Yeah. Third time lucky or something. Yeah.
Always when I sort of get somebody coming back on for the second or third time, and it's just always good to look back and think, well, let's look at what we talked about before. What did we discuss? And I'm looking to my left because my memory is not great, but the first time he came on was episode 19 and back in September 21. So good 18 months or so ago now since you been on the podcast. So, and then came back in May last year. So just 12 months-ish later that you're back on. So we talked loads of things before. We had plenty of chat about ad space and obviously other things as well. I made notes that we talked about your barbecue cleaning utensils before, which you probably won't
think. Right. Yes. Yeah.
I forgot all about that until I started to look back on that. And your favourite takeaway came up as well. So I know we talked about that last time. So we'll see what comes up on this time in the chat on the of no agenda. That
is there a challenge there to make it even more random than last time? Then
absolutely. So, but thank you, David, for coming back on. Do you want to just give for people that don't know you and not listen to the previous podcast, and for those that haven't, I would suggest you go back because they're still as relevant now as what they were back then. But for those people that don't know who you joined, do a brief introduction, David.
Yeah, sure. So basically, I'm a digital marketing consultant, trainer and coach, and I specialize in helping people in the financial services industry. And the reason I chose to end up in that particular niche really is because many years ago, I don't know if we've talked about this on the podcast before or not, but many years ago, I ended up accidentally owning half an IFA firm. And I wasn't an advisor, but one of my many responsibilities was marketing and lead gen and everything, which at that time I knew very little about. And when I say very little, I basically mean nothing. And so I had to learn a lot of stuff very quickly. And the sort of the first thing I latched onto back then, this is like early 2000s, was Google AdWords as it was then. That's still a big part of what I help brokers with now. But but everything I teach the brokers and advisors that I work with all has its roots in all that stuff that I learned when I had my own IFA firm all those years ago. And obviously, it's evolved since then, and we didn't even have social media back then, but it all has its roots in that.
Absolutely. No, like I say, I do recall that from last time. You did mention that time about the accidental IFA business owner. I think we called it something else by then, but I do remember that. So
I was young and innocent and whatever. So
but that is good grounding. Like I say, you didn't have really much time to think about it. You're thrown in at the deep end and thought, right, well, you've got two choices here. You either move away from it or you get on with it, and you chose to get on with it, which has been benefit and testament to you and benefit for a lot of brokers that I know.
Yeah, definitely. And I would say that one of the biggest things I learned very quickly back then was you're in an industry where by and large you're all selling the same products from the same lenders or the same insurance companies or whatever. And so unlike other businesses I'd been involved in before that, suddenly it's like, how do we differentiate ourselves? Because we don't differentiate on the products because they're the same as everyone else's. So how do we make ourselves different? And that's where I started sort of discovering the idea of kind of with being really specific about who your ideal client is and marketing to niches and based on their particular pain points. And again, that's still a big part of what I help mortgage brokers with today, because so many so many fall into that trap of thinking, well, I'm a mortgage broker, so therefore my ideal client is anyone who is thinking about buying a house or already owns a house, which is quite a big audience. And a big part what I have to do with people, I'm sure you see this as well, is say, okay, actually you'll get more business by casting the net smaller and being more specific about the kind of people you want, and and that underpins all the sort of marketing that you do from there on.
No, definitely, and that's one of the things. You were one of the first person that I listened to about the importance of niching, and we picked up on the podcast last time talking about niching and the importance of that, and how you do differentiate from, like you said, it's not until you actually take a step back and think, yeah, we have all got all the same products, whether you hold a market, whether you're with a panel of like a network that's got a panel that you can be whole a market, or you can go off panel. Everybody's got the same products with the same providers, with the same lenders per se. It's how you differentiate yourself. And obviously talking about the niche side of things, of really drilling down into the expertise of that particular industry, like that particular part of what you're niching into. Because I think, following on from our conversation initially, I worked with a few brokers, spoke to a lot of brokers who were really niching. And yes, it was very difficult at the beginning, niching, but now they're absolutely loving it because of what they've done, and that the foundations they put in place a year ago, 18 months ago, possibly 2 years ago.
Yeah. And those people, they stick in your memory more as well. If you said to me, name a mortgage broker who's on LinkedIn, then obviously there's a few I'll think of because I work with them closely or whatever. But if you just said, outside of people you work with, tell me a mortgage broker who's on LinkedIn, I will think of a name of someone who is in some kind of niche. In fact, first name that's just come into my head is Jamie, who does the stipend mortgages.
Jamie Thompson.
That's it. So he's not a client. Well, I've spoken to him a couple of times. But he's not a client, but he comes straight to mind there because he's got a specialism. And you remember the specialism first, and then the person that goes with it.
No, and it is a good. To be fair, it's good that you mentioned. It's funny that you mentioned Jamie, because he has got that niche to an absolute T. He's obviously he's got his own website, and he sort of maintains his own website from that point of view. And he's in talking to Jamie, as I do, and I spoke to him not too long ago. He is testament to the reason why you should be niching as a mortgage broker, and he says that exactly what I said there. He found it tough at the beginning, but that was his expectation. He knew that at the beginning he wasn't casting his net far and wide. He was fishing in quite a small pond, but he now owns that pond.
Yeah, exactly. Yeah. Whereas, as a one person business, you could never own a pond the size of the whole of the UK.
No, definitely not. So again, we digress straight away, Dave.
I know, we've done it already.
That's fine.
We weren't going to talk about any of that. Back to barbecue brushes.
That's the more important bit. That's what people have tuned in for, is what the latest cleaning utensils from a barbecue is. That's what the more important about. But I knew we'd go off on a tangent straight away, but just pulling it back into what's going on in the ad space right now.
So particularly in the big thing I would say over the last 12 months, whatever it is, last spoke in the Google ad space, is we're seeing that continuing trend of Google trying to automate more and more of the stuff within Google Ads, and at the same time removing the degree of control that advertisers have got, or at the very least making it harder to get the level of control that people used to have. So I'm talking about, for example, things like, it used to be that you could say to Google, I want to bid on this particular keyword in Google Ads, and only have my ad show up if someone types in that particular keyword. And, we keep seeing the boundaries on that being stretched and stretched. So now, you could be, let's take a simple example, you could be a mortgage broker who was bidding on, just one single keyword and saying, I only want my ad to show up for that particular keyword, but you'll still show up for lots of different things. So in some ways, it's Google saying, we're trying to help you by sort of showing your ad to a wider audience. But for those who actually want to, have precise control over their advertising, it's getting harder and harder to do that, and more sort of focus on automated bidding strategies and stuff. And those things, where I end up seeing this is where people have gone in and set up their own Google Ads, and they've followed all the default things, and it's all seemed nice and easy and nice automated systems and Google helping you and everything. But then they don't get the results, because I had someone the other day who'd got their campaign set up, and it was on an automated bidding strategy called maximize clicks, and they were getting a nice low cost per click, and we're getting lots of traffic, but we're getting no leads. And it was basically because, think about what they've said to Google. They've said to Google, I've got a budget of X amount per day. I forget what it was. Let's say it was £10 a day. I've got a budget of £10 a day. Get me as many clicks as you can for that. Well, that doesn't mean that they're going to be the kind of clicks that people who actually want to talk to a mortgage advisor. It's like if you had a shop, an ordinary shop in the high street, and you just said to me, David, get me as many people as possible through the door of my shop. Well, I could go out and convince anyone. I could go and pay homeless people to come into your shop, but they're not going to buy anything because they're not the right audience. But I've fulfilled my brief of just get as many people through your door as possible. And that's what that particular automated bidding strategy is doing with Google. So if you don't understand that stuff, you just look at it and go, well, I'm getting clicks for a really low amount, but there's a reason they're cheap clicks. It's because they're the clicks from the people that nobody else actually wants.
And is that like a conscious decision from Google in terms of like thinking that is it more spend from an ad point of view, or is it because they feel that they've been making Google more slicker? Or
I honestly don't know. I mean, it doesn't in most cases help the advertiser. So it will mean that advertisers get disillusioned with it because they go, I tried Google Ads and I burnt a lot of money, it didn't work, so I'll give up on that. Which I suppose on the one hand is not a good business model for Google to pursue, but on the other hand, I guess they know that for every person who thinks that and gives up on it, there'll be someone else coming along tomorrow who will give it a try for a while. It's almost like they want it to. There's two ways they could put people off using Google Ads. One would be to make the whole setup of it really difficult to do to begin with, so nobody would do it. And that's what they've chosen not to do. Instead, they've made it really easy to set up your first Google Ads campaign, but you get put off a month or so down the line when you realize that those default settings haven't done you any favors. But it makes no sense to me, because the end result for Google is the same, that people will either not use it at all or will try it and then leave.
Right. I think that, because I sort of see where you spend £400, you get £400 given to you by Google when you're first setting up and things like that. So I'm guessing from, like you say, from their point of view, it's like, well, there's just going to be a conveyor belt of people that are going to want to spend money on Google Ads, and that's like, if we can get them.
I mean, the voucher thing, that's. Are you old enough to remember when you used to be in the pub and the Marlboro girls would come around giving out free cigarettes and stuff, or even I think if you go that far enough, didn't people used to give out individual cigarettes at the school gate, to get kids hooked? That's what those vouchers are. Those vouchers are today's equivalent of that.
Yeah, and you've been very sort of politically correct there, because like you said, that's just how people. It's like gambling. It's the same thing of just getting you involved in it, and then offering that introductory thing to then thinking. And that's the thing, like it can be difficult as a broker, especially when they're first starting out. And you work with self-employed mortgage brokers the same as I do. That is when you're first starting out, it's difficult where to go, and they might think, well, yeah, I know that I need to do Google Ads, but then it is an absolute minefield. Not only to start up, like I say, it's easy to start up. Absolutely, you put your Google My Business, you set your firm up on Google My Business, and the first thing you get hit with is, right, what you need to do now is set up your ad account. Well, and you just filtered down to that route, and then all of a sudden you put £400 in the account. They'll go, we'll match it, and then you're then into that process, then, and into that conveyor belt.
And of course, what people forget is they haven't given you £400. They've just facilitated you giving them £400. It's a very, well, it's not even a clever psychology. It's quite an old psychology, but it works. And,
that's the thing, is it works for them. That is the thing. So, and like I say, it can be when you sort of see brokers for the first time and people reach out to you and they're just starting out as self-employed and business owners, or maybe not business part of the firm, but they want to generate their own leads. It's where do you start? Like, it's a big thing, isn't it? Like Google, you don't quite appreciate the whole ad thing. Is where do you start with it?
Yeah, and of course, not depending on the on any individual broker situation, Google Ads might not be the best approach for them, and that's it. So with all these things, you've got to think first of all of what am I trying to achieve? How quickly do I need to achieve it? Because a general thing I say, as I've got this membership group coaching program. When people join that, because there's so many different things they could learn about and so many different marketings they could do, I always have a road mapping call with them at the start to find out where they're at and say, right, there's all these things you could do, and one day you'll get to try them all, but for now, based on what you've told me, you should just go away and do this, this, and this, and keep it nice and simple. And I find you get some people who they're brand new to the industry or have just gone self-employed, so their priority is to start generating leads quickly. Now, for someone like that, Google Ads is generally the best bet because it is one of the quickest ways to bring leads in. It's not the cheapest, but it's one of the quickest. Whereas if I'm talking to someone who, the other kind of people I talk to quite a lot are perhaps people who've been in the mortgage industry a while, they've got an established business, but maybe, they're now getting to the stage where they're thinking, I want to retire from this one day. Therefore, I need to sort of, start bringing on other advisors and have leads for them. So they're not in that same urgency of generating leads now, but they need to start developing extra leads. So if someone like that, I might say, well, actually, you could look at doing Facebook advertising coupled with email marketing, where it's going to take you longer to get someone from first seeing your advert on, for example, Facebook through to becoming a client. But that longer nurture process with email marketing and stuff in between might mean that when they do speak to you, they're actually a better quality lead because they've had a few months via your emails and your nurturing to get to know, like, and trust you before they talk to you. So that's always and I get mortgage brokers say to me, if I say, what's your biggest challenge in marketing? Very often it is, I don't know where to start. Mm-hmm. And I totally get that because, I've just given just two examples there of totally extreme ends of where you could start. And how do you know which to do unless you've got someone who can kind of take you through the pros and cons of each system and, who isn't Google trying to give you 400 quid to try their version rather than someone else's, and can give you an honest appraisal of the different strategies, which will deliver leads quickest, which will deliver better quality ones, and all those things.
Yeah, definitely. I think it's sometimes it's doing it right from the start. So when you rather than, I understand, like you say, if you're a broker that may be looking at retiring, got an established business, got their own client bank, and bringing in a new advisor and think I need to feed them leads, I get that sort of situation. But looking to the ones that are just literally starting their own firm, starting the self-employed, thinking that, I always sort of talk about this, is about getting the right help from the start to put you on the right path. I think because people will then, because if they try Google Ads and that doesn't work, and then they try something else, and then they go, David, right, I'm going to become part of your membership program and I need your help on it. If then you sort of say, well, this is Google Ads is going to work for you, but they're in that negative mind thinking, well,
yeah,
it's not, David, like, you don't know what you're talking about. Like, you don't, I'm not saying they're going to be as rude as that, but do you know what I mean? It's that kind of thinking.
Yeah, because they've had their fingers burnt already. So it's, and I've always, I've said for years, I'd rather talk to someone who hasn't ever used Google Ads than someone who's tried it themselves, because probably if they've tried it themselves, they've had their fingers burnt, and I've got to do a lot more convincing that it really could work for them. But definitely. And often as well, with all these things, as we sort of touched on before, it's about, before you rush in and do the ads, whether it's Facebook, Google, Instagram, anything else, it's about being really clear on who it is you're trying to target. Because I'm sure, like me, if you're on Facebook yourself, you see loads of ads from mortgage brokers, because you probably, like me, are looking at mortgage related websites. So Facebook shows you that kind of stuff. And, I would say probably about 80 or 90% of the ads I see on Facebook from mortgage brokers are just your really generic, we're a mortgage broker, we can get you a remortgage, we're brilliant, click here. And I just go straight past those. The ones that sometimes make me stop are if it says something which is relevant to me. So if I see an advert that says something like limited company directors reduce the cost of your life insurance, I'll probably stop, because the fact that I am a limited company director and it says that in the advert is a visual interrupt that makes me stop. And then it's got a benefit in there, but I could reduce my tax bill or whatever. And obviously what they're offering is relevant life policies or whatever. But that's there in the detail. But the thing that jumps out at me is I'm talking to you, and this is the benefit I'm offering. And and they can only do that because they've decided our ideal client is a limited company director, and the pain point we're going to solve is that they're paying too much for their life insurance, or they think their tax bill's too big, or whatever.
I think that's it. Like, it's actually stopping the scrolling, isn't it? That's the thing. Because you can just lose days, lose hours, lose weeks, flicking, like just scrolling through, and you, from a consumer point of view, is something that you want to feel that is relevant to. So it's a case of, like, we see it, interest rate changes, interest rates have changed, and if you, like, as I do, like, I'm connected to a lot of mortgage brokers, and I look on my business social media, it's just, that's just hits you, nothing stops you from scrolling, does it?
No, I mean, most people have got some kind of news alerts on their phone, from BBC News or one of the mainstream newspapers. So with the best will in the world, I suspect BBC News are going to tell me interest rates have changed before any of the mortgage brokers on Facebook get round to telling me.
Yeah. There's chances are that, like I said, the notification is going to be there before anything else. What in terms of, like, and you talked a little bit about there, because obviously we've talked before about Google Ads, and we talked a little bit about sort of the thing with Google Ads. Do you find that, like, brokers have, like, when they're first starting out, do they all have their own preference, thinking, David, I really want to go down this route, and talk to you about a specific route of form of advertising, rather than having an open discussion with you and sort of say, look, this is where I'm at, this is what I want to focus on, what do you suggest?
It varies, really. It sort of depends how they found me, I guess, because some people come across me very specifically through, there's a lot of content on my website, for example, about using Google Ads for mortgage leads. So if they first come across me by going onto Google and searching, does Google Ads work for mortgage brokers or whatever, and they find something of mine, then the conversation is probably going to open with, how do I use Google Ads? But then I get other people who discover me just through more generic content of mine around lead generation for mortgage brokers, for example. So they'll perhaps come with a more open mind's the wrong word, but more of a blank canvas of, they just know they want to generate leads and they're looking for advice on how to do it. So it really varies depending on how they've found me in the first place.
Right. Okay. No, that's just what I thought, in terms of, like, what that, because I think, like I say, it depends on the origin of where they come from. Do you think that that's down to what so they're very much on Facebook day in, day out, and they don't, obviously everybody uses Google for various things, but you're not going to sit there scrolling through Google in your lunch hour, or when you're sort of sat on the train or something like that, whereas you're going to be scrolling through social media.
And of course that's probably the biggest difference, and one of the things that makes Google often more effective and faster is, on Google, people aren't scrolling through, looking at a catalogue of adverts or whatever. People only see your advert on Google Ads if they have gone to Google and typed in mortgage broker near me, or mortgages for doctors, or whatever it is they're searching for. They've typed in something that indicates they are actively looking for mortgage advice or protection advice or pensions or whatever it is, whereas on Facebook they haven't. So that's one of the big reasons why Google Ads gets results faster, because you are advertising on Google to someone who is what we call further down the funnel or further along the buyer journey. They already know they want a mortgage or they need a mortgage broker to help them do it. Whereas someone on Facebook, they may not need a mortgage at all. But even if they do need a mortgage, they haven't got their mortgage buying hat on at the moment. They've got their killing time on my lunch break hat on, scrolling through Facebook. So whilst they might react to your ad, they're not necessarily going to go straight from your ad to wanting to talk to you there and then, because they're not in that mindset at the moment, which is where that kind of nurture thing I talked about earlier on comes in, or funnels. It's that idea that you use Facebook just to hook them in with something low commitment initially, like download our free guide or something like that, and then you use either further different types of Facebook ads, or you use email marketing, whatever it is, to move them along that journey to the point where they are now ready to talk to someone.
Okay.
And that's a big thing people get wrong with Facebook as well. They have this expectation that you can take someone from a Facebook ad to, so someone sees advert for Craig Skelton mortgage broker. Never heard of Craig Skelton. Wasn't even really thinking about getting a mortgage at the moment. But hey, I'll talk to this guy. I'll click him and book an appointment. It's not going to happen.
No.
Whereas if you have a different expectation of, right, I'm specialising in mortgages for people with bad credit. What's a big pain point that people with bad credit have got? And when I say pain point, I mean really kind of put yourself in the shoes of that client and picture where they're at the moment, what's happened. So perhaps this potential client with bad credit, Mr. and Mrs. Smith, they've just been to their own bank to get the mortgage, done all the fact find, whatever, and the bank has said, oh, no, we can't give you a mortgage, you've got bad credit. What do we mean we've got bad credit? Well, we always pay all our bills on time. Well, according to your Experian report, 6 months ago, you didn't pay your mobile phone bill. Oh, well, we just forgot, or we changed bank or direct debit. But it's not bad. Well, I'm sorry, it's bad credit. So that's their pain point. They now know that they are classed as bad credit, which they didn't know an hour ago, and they can't get a mortgage from their own bank. So what's their pain point? It's this credit score thing that they've just found out about. So if on Facebook, they then see an advert that says words to the effect of, download our free guide, 5 ways to improve your credit score in the next 90 days. They're going to go, wow, that's what we need. Yeah. Because that's going to, it's not even about getting a mortgage at that point. It's about just solving the immediate pain point that will help get them to the next stage. So they'll potentially download that guide, whereas they wouldn't have spoken to a mortgage broker at that point. At the moment, I think all mortgage advisors are awful because they'll all say, no, you've got bad credit. So they download the guide. Then that gets them onto a mailing list where they can have further emails and again, not sales pitches, but further useful information, maybe more advice on improving the credit score. Now imagine if by following that advice, 90 days later, they get their own credit report again and their score's gone up. They're going to think you're amazing because they've not even spoken to you or paid you any money yet. You've already fixed their initial problem. So now that they're mortgage ready, who are they going to go to for their mortgage? They're not even going to go to Google and search for a mortgage broker. They're going to reply to one of your emails and say, Craig, I followed your advice and my credit score is better now. Still not perfect, but it's better. Do you reckon you could help me get a mortgage? See how different a situation is. But now that takes longer than the Google approach. But that's what I mean, that it may potentially give you a more engaged client because they've been through your sort of warm-up process before they even speak to you.
And the thing is, when a client, like you say, when you put yourself in the client's shoes of going to the bank and they've said no, and then it's a bit of you're in a panic situation as a client, aren't you? You're thinking, we didn't know about that. We didn't know this was affected. We didn't know, what do we do? And people, and so if you can help and support them at the time of panic and sort of really uncertainty, and you're that sort of knight in shining armor saying, look, this is how this is what you need to do. You're just creating loyalty and that for the client for the future. And that's where brokers sometimes I see get wrong. I'm glad you sort of I understand what you're saying, is that they look for the quick wins, they look for that instant thing, and don't see like the longevity of what they're doing, which is building a mortgage broker business. This is a long-term thing that you're looking to do. It's not a smash and grab, and you're not going to get to the people talk about 6 figures and all the rest of it. Like, you're not going to get to those things overnight. You're building this long-term business and whatever that looks like for you. So if you look at focus on and worry about the smash and grab, it's not going to, you're not building that long-term business with the clients and creating that loyalty and trust. Like you said, that's the big thing as well.
Yeah, exactly. And it's, this isn't, some people think this is a new thing that's, only sort of around in the digital age, but it's not. This is no, I've told the story before, hopefully not on this podcast, but of years ago, pre-internet, I used to be involved in the IT industry and used to get a fortnightly free magazine, a proper printed magazine we used to send out to IT freelancers. And there was a lawyer had a column in this magazine. There was an accountant as well, but a lawyer and an accountant had columns in this magazine where they answer readers' questions. But people would send in with actual letters, and they'd give, so they give me free of accountancy and legal advice in there. And I used to, learn stuff from these columns and whatever. And several years later, when I was in a completely different industry and needed some things like shareholders agreements and other sort of business contract paperwork done, guess which lawyer I went to? The one who'd done that column in that magazine all those years ago, because by doing that, I'd obviously seen he knew what he was talking about. He'd built up credibility and trust through the advice I've seen him give to other people and everything like that. And so that's why I chose him. And this is exactly the same kind of idea, but now obviously done online with greater speed and greater reach but the theory is no different from what the lawyer and the accountant were both doing in those printed magazines.
Yeah, it's true, absolutely.
More years ago than I care to remember.
But because you've seen that consistency, and you've felt as though you know that person because of the conversation. He's answering questions, so he's not just talking about what he wants to talk about. Obviously, they're going to be targeted, but the questions he would be asking, like, you felt as though, actually, I feel as though I know this guy. I feel as though I trust him. I felt it easy to reach out. You felt it easy to reach out to him because you'd instantly going. There's that connection there already. He hasn't got that connection with you, but you're going to be his client. So that it's then that connection back from a client to the to the broker point of view, or the whoever's providing the service. It's that connection that the client senses, which makes it more likely to reach out. So good point. Like I say,
I see the same. I see exactly what's happening in my business. Most of the clients I work with one-to-one in particular come to me through my mailing list, and they'll have been reading my stuff on email for however long, and then one day they'll send me an email saying, "Oh, I've got your latest email. I've been reading your stuff for a while, but your latest email, something you said in there really struck a chord. I thought we ought to have a conversation. Would it be all right to have a chat?" Yeah, of course it would. But and when we have that chat, exactly you said, it feels almost a little bit one-sided or unequal at first, because they know loads about me and I'm meeting them for the first time. Sometimes they forget that. But yeah, so and I encourage mortgage brokers to follow the same kind of thing. But it's often harder to get mortgage brokers to do that kind of thing than it is financial advisors, because because a mortgage is quite it's got quite a degree of urgency built into it.
Yeah.
As a mortgage broker, you can often get enough business, perhaps not as much as you would if you took a different view, but you can get enough business just by dealing with the people who are ready to do a mortgage now. Whereas if you're focused more on protection or investments or whatever, those are slower decision-making things. So you have to go more down this sort of nurture route. But I still try and encourage mortgage brokers to do it as well, because if they also do that, as you say, they're building more of a long-term business of people who will, come to them in 6 months or a year's time or whatever, rather than just focusing on the people who are ready to do stuff right now. That kind of approach is all very well. I think particularly when you're in a business like the mortgage industry, it's so closely linked to the property market. When the property market's booming, yeah, fine, you can just deal with the people who are ready to work with you now and solve the rest of them. But when things slow down a bit, you'll actually be quite glad that you've got that pipeline of people who are going to drip through who you first spoke to a year ago or whatever.
Absolutely. And I think, funny, I would ask you that question regarding we talk, obviously this is a mortgage broker broadcast, but I know financial advisors and I've got a financial advice firm. And I think, like you say, sometimes it's more of the instant win with regards to mortgage broker, whereas financial advice is a longer term plan, absolutely a longer decision, trusting. But the trust is even bigger with this, because this is even like, I'm trusting you with a debt, with a mortgage brother. But trusting you with my physical money is a different relationship altogether. And that's what sometimes people forget, that actually when the transition from mortgage broker to financial advisor, and I know people that do that, and I work with people that have done that. It's a difficult transition for them, because and that's why not all mortgage brokers are financial advisors at the same time, because you find it very difficult to then be transactional with the debt, to then be long-term forecast and relationship building with regards to asset.
And it's because the client is in a totally different mindset. So I did a session with my group coaching members last year about pain and pleasure, and how you can use pain or pleasure to increase sales, or the fact that people buy based on one or the other. Now, if all else is equal, people are more likely to purchase something, product or service, to avoid a pain than they are to obtain pleasure. Okay, but things shift when there's a time lag. So with a mortgage is generally about obtaining something pleasurable, your new house, your dream home, whatever. Yeah. A pension is about avoiding pain. It's about avoiding the pain of having no money when you retire or having to work till you drop dead or whatever. Yeah. Now, if all things were equal, the pain one would be the stronger motivator, the avoiding pain. But the problem is that the pain you're avoiding with a pension is a long way off. Yeah. So it still isn't as big a motivator as the pleasure factor of doing your mortgage and getting your new house. And so if you're trying to sell both those products, or you're transitioning from selling mortgages to pensions, for example, it's really important you understand you're dealing with a very different mindset of customer, between the two types of products.
No, definitely. And it's a great way to think about it, because that's in a very different, the client is in a very different mindset from one to the other. And see, like, it's a great point, David, to be fair. It is a really good point with regards to clients' mindsets at the various sort of stages with regards to, I think one of the things that you talked about, stability in the market, I think, and dealing with the ups and downs of the mortgage market, the housing market. I think if you have got, and thinking about from a financial advisor's point of view, is that is more of the stability. Like you say, if you've got that drip feeder client coming through, and the financial advisor aspect will give you far more stability, because it will just give you it just will, right? You won't have the right highs and lows kind of thing of being with regards to being a mortgage broker, and the joys of interest rates going up, interest rates going down, criteria changing, all the rest of it. It's just a totally different world and a different mindset from an advisor point of view and a client point of view.
Yeah, I mean, I see this. I'm saying one client in particular comes to mind when you talk about that, because I've got one of my one-to-one coaching clients. He's an IFA, but he also does mortgages, and we're actually working on sort of two strategies at the same time with him on his marketing. One to bring in mortgage stuff, because that's the kind of bread and butter that pays the bills, but he's got the eye to the longer term, but he wants to build up the pension and investment side more. But we're taking very different approaches with that. So the mortgage stuff is heavily focused around Google Ads. The building up the pension and investment side of the business is far more around the social media content, connecting people on LinkedIn, that kind of stuff, because that's the slower burn.
Okay, got you. No, I totally agree. Yeah, I think that's a difficult one. Doing both at the same time is a difficult. I do know a few brokers that do it and do struggle with that, and really want to. You soon find with them that they then think, I just want to focus on one. I don't want to have both hats on at any one time, shifting from one to the other.
Yeah.
And that's why you see plenty of IFAs go, don't want to do mortgages anymore. And that's nothing against the mortgages, just because they're in a different space. And I've seen IFAs go, do you know what? I don't want to do the financial advice anymore. I just want to do mortgages. So it's about like what is right. Not obviously, it's always about what's right for the client, but it's about what's right for you as an individual with regards to your business as well.
Yeah.
One thing that I just wanted to strip it back to, which we've not talked about before, because we've talked about Google Ads, we've obviously talked there in terms of the Facebook stuff, and obviously the program where you're getting the people right from the start and putting them on the right path. You sort of said, which you've not ever spoken before, email campaigns, email marketing. Is that something that you're looking at now introducing within the program?
Yeah, I mean, it's been there since day one, actually. I mean, the membership program I've got has training courses on all aspects of digital marketing. So everything from setting the strategy, how to choose the right niche, how to identify your ideal client, through to, and then it covers things like how to build and design landing pages on your website that will convert those ideal clients into leads, and then all the different ways of driving traffic to them. So email marketing, SEO, Google Ads, Facebook advertising, LinkedIn advertising, blogging, Google My Business, everything, because different strategies will be most suitable for different brokers at different times. But the whole thing really, it's whatever method you're going to use, and this is really what sums up this membership program. It's about a 3-step framework of identify your ideal client, attract them to your website or to your world using one or more of all these different digital marketing channels, and then convert. So identify, attract, convert as in convert them from being a visitor to your website into being a lead. or even beyond that, convert a one-time client into a multiple-time client. We did on the group coaching call we did this week. I was talking about how you can take a list of existing customers, upload those into Facebook, and use and advertise on Facebook and Instagram just to those existing customers. Now, why might you want to do that? Well, suppose, for example, you've got a list of people who took out a mortgage with you in the last year, but who didn't take out protection. You could run protection ads to that audience. And that audience, of course, are more likely to go straight from the ad to talking to you because they already know who you are. In fact, they've done business with you.
Exactly.
So it's not just about, what I try and do is not just sort of deal with the immediate thing of, right, you need some leads, let's get you a Google Ads campaign. It's how can we, do that, but also help you grow your business and, tap into the assets you've already got there, like your existing clients who you probably haven't, done as much with as perhaps you could.
Yeah. And the thing with that is, like, I didn't even realize that was capability with regards to Facebook ads. I didn't even know that.
Yeah, it's called customer lists is the thing.
Right.
But it's and or even another simple example we came up with on the call, because I said to the people on the call, this is what it does. How do you reckon you could use it? And people came up with some ideas, and one of them was, if you've got a list of people that took out a 3-year fixed mortgage 2.5 years ago, you can run specific ads to those people. And because what I said before about how if the ad feels like it's speaking to you, like with my limited company director, well, imagine if the ad said 3-year fixed rate mortgage coming to an end soon. But we go, oh yeah, actually it is. Or they might not have remembered it is, but they're going to feel more of a connection with the ad. And of course, they don't know that there's a reason for that connection, because you're only showing it to people that full well took out a mortgage 3 years ago. But again, it just makes the ad more relevant to them.
It does, and you are more like, if you sort of seeing that from a brand or a business or a person that you already had interaction with and know and trust, you're going to stop. You are going to stop scrolling. You will naturally look at that. Whether that's because if you've not come up on their feed in the last 2 years since you did the mortgage, or the 5 years, whatever that case may be, if you're then throwing that into their feed, they're going to stop, because they're going to know, and then it's just sparking that question in their mind, going, oh yeah, like when is our remortgage due? When is it due? Oh, do you know? Yeah, and it's just sort of then and then there's that connection there. They, like you say, they are going to contact you via Facebook, because it's just going to go, if you've got that button on there, whatever, the easy way for them to then contact you. You say, well, why would I not? They're just going to do it, aren't they?
Yeah, and also see then that suddenly you're then not an annoying advert. You're actually helping them. So a lot of people say, oh, I don't want to see adverts on Facebook or any other platform. But actually, if they're adverts which are going to help you, you don't mind seeing them. It's just you only really remember the ones that annoyed you because they were totally irrelevant.
Yeah. Well, you only remember the ones that are, like you sort of said earlier on about, if you're on mortgage broker sites or looking at mortgages and you're getting through a mortgage, they're, like you say, I accept that they're the annoying ones, but actually something like that is not, it's a purposeful ad.
Yeah.
And it's relevant to them, and it's from a brand that they know.
Yeah. And because again, think about what the advert's about. It's not about selling you a mortgage. It's about helping you avoid the pain that you're going to feel in your wallet if you don't do your new fixed rate and you end up on the SVR in 6 months' time.
Yeah.
And that will motivate people more than, because I always say this to people, I said, no one, if you're a mortgage broker, no one that you've ever sold a mortgage to wanted a mortgage. Who wants £500,000 worth of debt? Oh, thank you very much. No, what they wanted are the things that mortgage gives them, or the problems it solves for them. It gives them a nicer kitchen, or it gives them the extra bedroom they need because they've got twins on the way, or whatever it is, it's solving a problem or whatever. Yeah. And it's not the mortgage is just the tool that gets them there. And again, in all your marketing, if you can focus on those things, the client's goals, their aspirations, or the pains they want to avoid, or the problems they want to solve, focus on those things rather than, we've got a 3-year fix at X%. Great. So what?
What relevance is that to me? What difference does that mean to me right now while I'm scrolling through, and I'm not going to stop on that and even bother? He's not even going to go in. It's just like, he's just going to pass on and looking at something else that's more relevant to me. So Absolutely. And like I said, I didn't realize that function with past clients. So like I'm always about retaining clients and making sure you're keeping in contact with them, and they should hear from you. You can't leave that client from when they move in to then 4.5 years to later, or 18 months later, or whenever they're that age. They've got to have some communication from you. What a
Yeah.
better, like, is a great way of doing that from an app.
Otherwise, they're going to basically, whether they say it or not, we end up thinking, oh, that Craig's a nice bloke, but he only contacts me every 3 or 4 years when there's a chance to earn some more money out of me. Whereas if you keep in touch in between times when there is no ulterior motive, then that's a different story, isn't it?
Absolutely. Definitely. And it's just a different relationship with a client, because then it is about the help and support that you're offering, rather than, well, I need some more money off you kind of thing. So
yeah.
In terms of when you look at, just one last thing I just wanted to look at, in terms of when you look at things like that with Facebook ads, are the costs pretty minimal from that point of view with client, compared to a Google aspect?
Facebook ads are cheaper, yes. I mean, that's partly because they don't get you such instant results as Google ads tend to. So, there's a reason why they're cheaper. But yeah, if it's done right and done with the right kind of follow-up and funnel and stuff in place, then yeah, it definitely works. When one of the guys in the membership program, he was telling us this on a group coaching call a few weeks ago, but he'd started running some Facebook ads following the kind of strategy I'd outlined in a previous coaching call. And I forget the exact numbers now, but it was something like he'd been running them for about a week and spent 150 quid, or just over 150 quid. He'd had, I think it was about 30 inquiries.
Wow.
Whatever the number of inquiries was, I remember he'd spoken to 2/3 of them, and he reckoned that 3 of them were going to proceed to business, and he was doing equity release. So, you run the numbers there. He spent about 150 quid, say an average equity release case is 3 grand. Even if he was a bit optimistic and not all 3 of those were going to convert and only one of them did, he's got 3 grand from 150 pounds spent. So, but because he'd done it the right way, rather than just blast out an advert saying equity release is brilliant, get some here.
Yeah. And then the normal stuff that people do. So
yeah.
Excellent. David, I knew we had no agenda. We haven't caught up for a while, and we've sort of gone on for 46, 47 minutes now. So yeah. To be fair, this has been really insightful. It's been great, obviously great to catch up and see where you're at. And I think I know a couple of people on the membership program, and I only hear great things about it. So yeah, so well done in terms of educating brokers from that aspect. So if I'm thinking about the program or wanting to know more about program, what's the best way to reach out and contact you?
Drop me an email, david@theppcmachine.co.uk, or find me on LinkedIn as Google AdWords guy, or just go to the ppcmachine.co.uk and fill in the contact form, basically.
Right. And we'll get all those tagged into the to the post when we release the podcast. So
yeah, there's loads of free guides and things on the site as well. So I mean, if people aren't ready to sort of join a membership program yet, there's lots of free bits. I can give you some links to put in the show notes and stuff for that.
Excellent. Yeah, if you can, that'd be great, and we'll get all those put into the release. So, but David, been great to catch up. Honestly, thank you. Thanks for taking the time to come back on.
The pleasure as always.
And good. We never got into takeaways, utensils, or anything.
I know. Yeah. Well, in fact, we have to do a bonus podcast in a couple of months. So what's this summer's hot cleaning utensil?
I think we need to have that bonus edition somewhere. That quick, like the weekend edition of the Mortgage Broker broadcast, talking about the takeaway or the latest cleaning utensil for the barbecue. But yeah, we did keep it on track. We did keep it on point and relevant to the mortgage industry. So we're
getting like this. See, after 3 goes, we've kind of got the hang of it.
yeah. Finally. So, David, thank you so much for your time. Thanks for coming on. Thanks for sharing and being honest as well, and trusting me with no agenda and just having a chat.
No, always good fun. All right. Cheers, Craig.
Thanks very much, David. Cheers. Thank you for listening to the Mortgage Broker broadcast, the podcast which helps mortgage brokers at all stages of their mortgage broking career. If you have any questions about this podcast or any topics you want us to discuss, or if you're interested in working with me further, then please get in touch.